The accumulation model that's been a traditional model for years and years. It's the Wall Street model. It's what everybody is, kind of abdicates to because that's what everybody does. Just a quick look at this. If you've got $2 million, and let's just say you're being very conservative and looking at a 4% return, which you can get in treasuries today, but you need to take 10,000 out per month to live off of, that's your depletion part, then you're going to run out, over a period of 25 years. Now, some people might say, well, that's good enough. If I could have $10,000 per month, take it out 25 years. But again, going back to the inflation factor, we have to deal with that. What happens if we have 4% inflation? Well, instead of going out 25 years, we reduce that down to 17 years. Just with a 4% inflation, now I think all of you would agree that inflation is running much higher than what the government tells us with the CPI. They manipulate those numbers. I would bet inflation is still running close to double digits. I mean, just look at your own report card on what you spend on in property taxes, insurance, utilities, food, everything is much higher. They've even said like the cost of healthcare or healthcare premiums has gone down. Who's that gone down for? I mean, it's so manipulated. So you have to factor in what do you really think inflation is? And so let's just take another stab at it. What if it's at 8%? Well, now we reduced that 25-year span of depletion all the way down to 12 years. Cut it in half, more than cut it in half. So inflation's got to be something we have to be concerned with. We didn't have to until in the last 4 years. It's become a major factor. And all the financial models that people have used and financial advisors who've been doing their work for the last 80 years have not had to deal with this. Most of the financial advisors out there today have not seen a full secular cycle, not a market cycle, but a secular cycle, which we'll talk about in just a minute. One more look at inflation. Let's just look at 12%. On $1 million, 12% inflation, we'll cut it in half in 6 years and cut it by 75% in just 12 years. Again, you figure out what you think the inflation run rate is, but I don't think it's anything close to what they're saying it is. You pick your number, but I think if you're doing things shy of 8%, I think you're probably fooling yourself, my opinion.